Hey guys, today's video is about Costco, a company that has lots of competitive advantages. Just take a look at the company's share price history. It went from 88 cents in 1983 to $439 today. This means that if you had invested $1,000 in Costco shares in 83, today you would have almost $500,000. And I'm not even considering the dividends that were distributed over time. And the company is still growing. Over the past 5 years, revenue has grown at a compound annual rate of 9.7%, while net income has increased 15.7%. Costco Wholesale Corporation operates an international chain of membership warehouses carrying brand name merchandise at substantially lower price than are typically found at conventional wholesale or retail stores. The company was founded in 1983 in the state of Washington and today has more than 800 stores around the world, with the majority, 559 in the US and 105 in Canada. With that, 72% of revenue comes from the US and 13% from Canada. And here's something interesting. International stores account for only 15% of total revenue, but represent 23% of operating income, which means that they can be a lot more profitable and allow the company to keep growing. As we can see here, the number of stores is still growing at a pace of around 20 stores per year. They have a unique business model which represents one of their main competitive advantages. They have an association system or memberships, which means that if you want to buy, you need to be a member. There are mainly two types of memberships: Gold Star memberships for individuals and executive memberships for companies. Here we can see how much each type of membership represent. Almost 47 million members are Gold Star customers and just over 11 million are business or executive customers, totaling 58 million members. Customers pay an annual fee that varies between $60 and $120 and are entitled to buy at Costco stores at a considerable discount compared to the prices they would find at competitors. The customer loyalty rate of the company is gigantic at 91%, which means that 91% of members renew their subscription annually so that they can continue shopping. This makes the revenue for membership plans reach $3.5 billion a year. As you can see here, the company has an annual net profit of around $4 billion. That is, around 88% of the company's profit comes only from the value of subscriptions. And this is one of the company's greatest competitive advantage. They sell practically at cost price so that the customer will always find cheaper products in Costco stores. In doing so, they are able to build customer loyalty, and almost all of the net income comes from the annual subscription. What a sensational strategy! In this table, there's the average number of sales per store in the last 10 years. We can see how the company has been able to deliver results. If we take, for example, the line highlighted in red, we can see that the company opened 15 stores in 2012, that these stores generated sales of $105 million, and that this number increased until the end of 2020, reaching $173 million. The company is the third largest global retailer, has a market cap over $170 billion and almost 300,000 employees. The stock trades at a price-to-earnings ratio of 41. As a result of the strategy of building customer loyalty through low price, they have one of the lowest net margins in the sector at 2.4%. So we can see that the business model focuses on generating lots of revenue so that they can gain on scale. They have a very strong financial position with more than $14 billion in cash, $22 billion in property and equipment, and very low debt. They also generate value to shareholders through the repurchase of shares, with more than $9.2 billion spent since 2005. They face competition from other giants like Amazon, Walmart, Target, and indirectly from some smaller competitors like Dollar General. By the way, there's a video with the complete analysis of Dollar General here in the channel. I'm sure you're gonna like it. Costco focuses on selling in large quantities. That's why the distribution of products in stores is mostly in the form of wholesale stores, as we can see here. The stores may not be the prettiest you've ever seen, but that's not really important for them. What they really want is to sell as much as possible, seeking to gain customer loyalty through the lowest market price. The warehouses present one of the largest and most exclusive product category selections to be found under a single roof. Categories include groceries, jewelry, television and media, automotive supplies, car wash, tires, pharmacies, hardware, sporting goods, wines, and lots of other things. Members can also shop for private label Kirkland signature products designed to be of equal or even better quality than national brands. The company also operates self-service gasoline stations at a number of its locations. Today, only 4% of sales are online, but e-commerce started to grow robustly. The company's revenue is divided into food and sundries, that is, packaged foods and sundries, which are the biggest part of the company's revenue, with $68 billion, hardlines, which include a wide range of items such as furniture, tools, electronics, etc., with $27 billion, fresh foods with $23 billion, softlines, which are soft items such as bed and bath products, for example, with $17 billion, and other, which are auxiliary products and others with $26 billion. With regard to dividends, Costco is not known for being an excellent dividend payer, especially because they have been using cash to grow, not to distribute to shareholders. Anyway, they have been distributing dividends since 2004, and this payment has grown at an annual average of 13%. Today, this still represents very little, a yield of 0.8% and a payout of around 30% of the profits, but they will most likely become an excellent dividend payer over time. When it comes to the strengths and competitive advantages for this company, we can highlight the loyalty system through memberships, which is the main distinguishing feature of the company, the fact that they can sell for end customers at wholesale price, churn of only 9%, and financial strength with a very solid balance sheet. With regard to opportunities, we saw that most of the stores are located either in the US or Canada. For the rest of the world, the company's expansion is just beginning, and they still have lots of room to grow. When it comes to the weaknesses for this company, we can highlight the net margin, which, as we saw, is only 2.4%. This low margin is part of the company's strategy to have lots of revenue and to sell at cost price in order to retain customers, so there's nothing wrong here, but at the same time, this is a risk because any small mistake can make the company further compress a margin that is already low, or even start operating with a loss. I don't think this will happen. We're talking about a super solid company which has delivered consistent and growing results for almost 30 years, but it's important that you are aware of this risk. So, what do you think? Is Costco a stock to buy and hold? Please let me know your thoughts in the comment section below. I hope you guys enjoyed this video. Please don't forget to smash the like button and subscribe to the channel for videos of some of the greatest companies to invest. See you next time.